Can I start?
Ma'am, you can start now.
All right. Very warm welcome to our third session on technical analysis, where we are going to continue with our discussion of candlestick chart types. So I hope you remember what I said in the previous session, that a picture or a graph or a chart is worth 1,000 words. So when it comes to trading and investing, right? And there are several investors who want their charts to tell them the story as to how to go ahead with their trading decisions, buy, whether to sell, whether to hold. All right. So I hope you remember this green candlestick chart or the white candlestick chart. So I'll just sort of take you through this again. As you can see over here, this is a bullish candle. And why bullish? Because the color of the real body, so this is the real body, the color of the real body is green. Okay, now as I said, that it can be white, the real body can be white, or the real body can be green based on the kind of software which you are using. But if it is white or green, whatever the color of the real body, it indicates a bullish candle and a bullish sentiment existing in the market. So this was the opening price for the day, the price at which that particular asset class opened. It can be a stock, commodity, it can be a currency. Okay, so this reflects, this part over here, this arrow reflects the opening price for that particular day, and the one over here, this arrow indicates the closing price. So since the closing price is over and above the uh, opening price, it indicates that the market sentiment for that particular day was very positive. And this indicates, this arrow at the very top over here, it indicates the highest price which the market reached related to that particular asset class type. And this one over here, it indicates the lowest price at which that asset class traded on that particular day. So since the closing is over and above the opening price, it indicates a bullish candle. And the one which you are seeing over here, these two shadows, they are referred to as the wicks, or you can also refer to them as the upper shadow, and this is the lower shadow, right? And on the right side of your screen, you can see the day's range as to what was the highest price for the day and what was the lowest price for the day. So this gives the range. So let's say the highest price was 100 and the lowest price was 5, which means that the range for that particular day was 90. Okay? So higher the day's range, it indicates that the market has been moving, has been making a lot of moves from a particular price to the another price. So as I said, it zoomed to a high of 100 rupees, and then maybe at one point of a time it was trading at say 5. So the range is quite big. Okay? So this is what reflects, this is how you will watch the range. And in that particular day, what was the highest price, highest trading price, and what was the lowest trading price. So this gives kind of a move as to which direction, or this gives a kind of an understanding as to which direction the market is. Coming to the black or red candlestick, of course, if, as you can see, this real body can be black or red, indicating a bearish sentiment and a bearish candle thereby. And as you can see, in this case, the closing price is much below than the opening, which means that it is the seller's market that particular day, and the sellers are having a higher pressure in the, or more pressure in the market rather than the buyers on that particular day. And this again is showing the highest price for the day. This shows the lowest traded price for the day, right? And of course, these is the upper shadow and the lower shadow. This gives the day's range, that is the difference between the highest traded price and the lowest traded price, right? So It can either be black or red, indicating a bearish sentiment on that particular day and also indicating the bearish. So now let us start with a different chart type, which is doji. Now a doji occurs, so you can see several kind of dojis over here, and we'll discuss all of them one by one. So a doji occurs when open and close price are same. Okay, so a while ago I discussed as to what are the opening price and where to see them in a candle, right? So a doji occurs when the open and close price are same or they are very close to being the same. And it is at that point in time that you understand that a doji has been formed. So you can see a doji on the right side of your screen, and this candlestick is formed when the opening and closing prices are virtually. Okay, so you cannot see that this is an opening price or this is the closing price. It's not detectable, and they are virtually equal. And another important criteria or feature of doji is that the length of the body, the real body, is null or it is close to null. So the candlestick requirements are that the body can either be colorless or it can have zero length, okay? And candlesticks with close to zero body lengths and white or black body colors are accepted as doji. Either white or black, or you can say green or red. Now, what is the trader's behavior if they get to see a doji in any of the trading days? So doji is particularly a signal showing indecisiveness in the market. And so the traders, they are clueless as to which direction the market is going to move, right? And it represents a tug of war between buyers and sellers. So it simply shows that prices, they have moved above and below. As you can see, they have moved above and below the opening or closing prices, the opening prices during the day, but the session closed either exactly or at very near to the opening price. Okay, and the overall result is a standoff, right? And it shows neither the bulls nor the bears are able to gain control during the day, and it is possible that a turning point could develop soon. So it can indicate a kind of a risk, and thereby doji happens to be an important candlestick. So it provides information on its own. So the moment you see a doji, it gives you a lot of information, and it also features uh, in other patterns as an important element. Now it needs to be interpreted in terms of a preceding trend or a preceding candle. The appearance of a doji, as you can see over here, okay, after an advance or a long white or green candlestick signals that buying pressure is getting weaker, okay, and its appearance after a decline or a long black as in red candlestick signals that selling pressure is diminishing. So the doji might strongly show a reversal happening in the market. So it gives the message that the forces of supply and demand are becoming more evenly matched, and consequently a change in trend. So the moment you get to see a doji, you have to be a little bit cautious, right? Because there might be a reversal happening, right? So understand a word of caution over here. A doji alone is not enough to identify a reversal, and further confirmation by following signals may be warranted. Next, we come to the various doji patterns, and one of, I would say, a very uncommon pattern, I would say, is the fourth doji. Now here, as you can see, there is no upper shadow, there is no lower shadow. What you can see is a single line, and that is why it is referred to as a four doji. Why? Because the opening price, the closing price, the high price, and the low price happens to be one and the same. Okay, so it's simply a horizontal line that has no upper and lower shadows, and of course there is no real body to be seen. So the length of the body is none, right? And as I said, the open, close, high, and low happens to be the same throughout the entire. something which is very, very uncommon, right? So it's a very rare occurrence and it will be seen only if all the four prices components are equal or same. It represents complete and total uncertainty by the traders concerning the market direction. So neither the sellers nor the buyers are putting pressure in the market on that particular day. And it usually occurs, have to be very, very careful on this, and this is a very important thing, that it usually occurs when a stock is very illiquid or it has low volume or the data sources does not report any other price other than the closing price. So a four price doji is not reliable on its own, like most of the other candlestick. Okay, it might reflect a sense of complete indecisiveness for that particular day. So you have to see what is happening in the preceding days or in the forthcoming just a day after to actually reflect to understand the market sentiments, to reflect upon the market sentiments as to which direction the market is most likely to go. Coming to the long-legged doji. So why long-legged doji? So if you see the shadows, they are very, very long as compared to the opening and as compared to a normal candlestick, right? So the length of the body is again none or zero, right? Which means that the open and closing prices are very close to each other. They are at say at par with each other, and they usually are at the middle of the candle. They are usually at the middle of the candle. So this is one good way of recognizing a long-legged doji. And as you can see over here, both the upper and lower shadows are long and equal in, and you can also see that the closing and opening price happens to be 1 and right? So the traders behavior is reflected from a long leg doji is observed when prices trade well above and below the day's opening price, but then close either exactly at or almost at the same level as the opening price. So there has been huge strides as far as the prices are concerned, but eventually the closing prices are at par with the opening. So what does it mean? It means that the end result is not different from the initial open despite the whole excitement and high volatility which existed during it. So this was the highest price, this was the lowest price, which is indicating that the day's range was very, very high and thereby indicating a very high volatility during the day. And this implies a loss of sense of direction and that there is a great amount of indecisiveness existing in the market, right? And this kind of a long leg doji, whenever it is observed, it is especially important when it is seen at the market tops. So let's see this. You are seeing a long leg doji over here. So where do you see? Here is a long leg doji, right? And the candlestick is especially important when it is seen at the market tops. And as I said, doji usually showcases or reflects that there is going to be a reversal pattern which might be seen. So the moment you see this kind of a long leg doji over here, look at the opening price and the closing price. Very, very small difference as you can see. So the real body is absolutely null. Okay, I mean very close, I would say, or very, very small because the opening and closing are almost at the same level. Almost, I would say, it's not completely same, not completely equal, but absolutely little bit close to each other. So you can get a little, you can see a little bit of the real body over here. But since it is occurring at the market tops, it essentially indicates that a reversal is going to happen. So far, if you see the trend, the market was somewhat bullish. The moment you observe this long leg doji, reversal is likely to happen. And after that, what is it you see? a reversal has happened and the market is moving down. The market is moving. You see this. The market is moving down. So after that long leg doji which is witnessed, the market moves down, showing that a reversal is finally happened. So this is how you can use your long leg doji for your decision. Again, over here you also witness a long leg doji. Do you see this? Again, reflecting a reversal. So as you can see, the market has opened at a higher open, okay, and and a higher close after a long legged doji, and post which you can see that the market goes. So we see again a reversal after a long legged. Right? So now let's come to another part of another kind of doji, which is called as an umbrella or a dragonfly doji. Okay, so why an umbrella? Because you're seeing something at the top. Okay, and that is why the name umbrella. But why doji? Because the opening price and the closing price for the day has been one and the same. They are equal. That is why doji, right? But this is referred to as also a dragonfly doji. Now, this candlestick is a type of doji characterized, as you can see, with no upper shadow, but you can see that there is a long lower shadow, right? And that is why it is also known as a dragonfly doji. So this kind of a picture or a chart type reflects dragonfly, and that is why the name dragonfly doji. How will you recognize? Of course, there is no body, okay, or is it it is very close to null. When I say null body, it means that the real body is not there. Opening and closing prices being one and the same. And you can also observe over here that the open and close are same and leaving no upper shadow. Do you see this? Why there is no upper shadow? Because in this case, the open and close are very close to the top of the candle. They are very close to the top of the candle. So in this case, what do you observe? That the highest price, the opening price, and the closing price happens to be one and the same, thereby leaving no upper shadow. And what you can see is only the lower shadows. This was the lowest traded price, right? And the low shadow is right. Uh, so what it indicates about the trader's behavior. So the umbrella or the dragonfly doji, it indicates that sellers mostly dominated trading during the day, and they were able to drive prices lower. So if it is a dragonfly doji, it reflects that the shareholders have overshadowed the buyers on that particular. And this happens and the sellers have pushed the price. The sellers have pushed the price at this level. Okay. However, the most interesting part of it is that the buyers resurfaced at the end of the day and they successfully pushed the prices back to the opening level and to the day's high. So those sellers were dominating during the day, but the buyers they came and they pushed the prices at the opening level and to the day's. And if you witness or if you see an umbrella or a dragonfly doji, it is but understood that it is giving a bullish reversal kind of signal. Okay, at the bottom, especially if it is occurring at the bottom. Okay, and so if it appears after a long downtrend, long black stick, or if it is seen at a support level, okay, it will indicate that a reversal is likely to take place. At the same time, also remember that the umbrella means signal a bearish reversal at the top if it appears after a long uptrend. Okay, so you have to be very careful at this. So The umbrella has the potential to signal a bullish reversal at the bottom if it appears after a long downtrend, long black stick, or you can say red candlestick, or if it is seen at a support. And similarly, umbrella may signal a bearish reversal at the top if it appears after a long uptrend, a long white stick or a long green candlestick, or if it is seen at a resistance. However, both bearish or bullish confirmation is required in both situations. So you have to see after that dragonfly doji, the very next day, what is the kind of candlestick which you get to see. Now, this is, you can see over here. Do you see this? The lower shadow is very long. The lower shadow is very long over here. Okay, and you can also see an upper shadow, but that is not that great. So essentially, it is reflecting and a dragonfly doji over here. This one. Okay, and since it is seen at the bottom of the chart, that is at the support level, as you can see at the bottom of the chart and at the support level, you will find that immediately there will be a reverse. There will be a reverse. But you have to look at some kind of what is going to be what is the kind of candlestick which is happening immediately after the umbrella candlestick or a dragonfly doji candlestick, right? So as you can see over here again, there is a black candle which is witnessed, but after that, if you see this is on the higher side as compared to this particular dragonfly doji which happened on the very previous day. So look at its high, okay, look at its low, look at its opening price, okay, this one, okay, and look at its closing price. So this kind of this candlestick which is happening after the very next day of the umbrella, after this umbrella has appeared, what it indicates? So it indicates a kind of a bullish trend, because if you see the highest price, its highest price, look at its lowest price, look at its opening price, and look at its closing price. So just if you only look at the highest price and the closing price, what do you get to see? That it is higher as compared to the previous candlestick, which is your umbrella or a dragonfly. And immediately after that, you see those white candlestick or the green candlestick. So the umbrella has the potential to signal a bullish reversal at the bottom if it appears after a long downtrend, long black candlestick or red candlestick, okay, or if it is seen at a support. So this is a very good indication, okay, that a reversal will happen. And what kind of a reversal in this case? Because it is appearing at the support level, it indicates that now a bullish reversal is very much expected. Now, coming to the inverted umbrella, which is also referred to as the gravestone. Why gravestone? Look at the way that, look at the chart pattern, look at the candlestick pattern over here. It looks like a gravestone, or it is also called as inverted umbrella, right? So in this case, what you see is that this kind of a candlestick or this kind of a doji is characterized with no lower shadow. You see this? There is no lower shadow. Unlike the umbrella or a dragonfly doji, in this case there is no lower shadow. But what you can see is the long upper shadow, right? So, and also another thing which you witness over here is the body is now, the real body is not to be seen, or it's very close to none. Okay, and the open and closing prices are at very close to the bottom of the candle, thereby leaving no lower shadow. What again you can see is that in this case, the opening price, the closing price, and the lower price of that particular day has been one and the same. Okay, what you can see, what this line is actually showing you, horizontal line is indicating you that the opening price, the closing price, and the lowest price of that particular day, the lowest price of that particular day has been one and the same, and thereby you cannot see any lower shadow for that particular day. But what you can see is only the upper shadow. So this is the highest trading price of that particular trading. Okay. So, and in this case, so if you reflect something, if you get to see something like this, you can always understand that the market is up, right? And what it indicates about the trader's behavior. So an inverted umbrella or a gravestone doji, it indicates that the buyers dominated the trading and they were able to drive prices higher during the day. The buyers dominated the market. They could pull the market to a very, very high level on that particular day. However, the sellers they resurfaced by the end of the day and pushed prices back to the opening price level and to the day's. So an inverted umbrella has the potential to point out evidence for buying pressure and indicate a potential bullish reversal if it appears after a long downtrend, long black candlestick or long red candlestick, or if it is seen at a support. Likewise, it may show a failed rally and indicate a potential bearish reversal. That can also happen. Okay, so it can also indicate a potential bearish reversal if it appears after a long uptrend or a long white candlestick or a long green candlestick, or if it is seen at a resistance level. Okay. Bearish or bullish confirmation is required in both the situations. So the way we had seen in our previous chart, we really need to confirm, by looking at the immediate day after that particular gravestone doji or an inverted umbrella doji. Right? So that will give you more clear understanding as to which direction the market is heading to move. So in this chart, what you get to see is an inverted umbrella. Okay. You see this inverted umbrella, also called as gravestone doji, and you see that the opening price, the closing price, and the lowest price of the day is one and the same, and you thereby don't get to see any low shadow. But what you get to see is only an upper shadow, which means that the buyers had dominated the market during the day, but gradually it is the sellers who pulled back the market. And look at what time it is happening. It is happening at once when the market is on the higher side. So the trend is an uptrend over here. And if you are witnessing it at an uptrend, okay, so what will happen? This indicates that the market has reached the resistance level. Since it is at the uptrend or the market is uptrend, it indicates that the particular stock or asset class had reached the resistance level. And if this kind of an inverted umbrella is seen at the market, once when the market is uptrend, okay, it indicates that a reversal is surely going to set. And to confirm that a reversal is setting in. So here the reversal is going to be bearish in nature. And in order to confirm that, you have to see the candle which is forming immediately after the gravestone. Okay, so what you can see over here is after that gravestone doji has appeared, you see another bearish candle. Okay, and you see that the lowest price of that day's candle after that gravestone doji had appeared is very much same or very much at par with the gravestone doji that happened the previous day. Okay. You see this? However, at this point in time, you can see the real body which is coming in between means that there is a gap between the opening price and the closing price. Okay, and of course, the highest price for the day in this particular chart, of course, is very much at par with the previous day's highest price. But what is more important over here is that it is, the lower price is at par with the previous day's lowest price, okay, indicating that the market is having a bearish sentiment even in the very next day. Okay, so that is one important thing which you get to notice. And of course, it also reflects that the sellers are dominating the market. Eventually, it is the sellers who are dominating the market. So though the price moved at a higher level, so the buyers had pulled up the price, but eventually it is the sellers who have dominated the market for that day. And this kind of acts as a confirmation that going ahead, the market is going to be bearish in nature. Because the candlestick which you get to see immediately after an inverted umbrella or a gravestone doji, if it is again reflecting a bearish sentiment, okay, as you can see that it is black, it can either be black or it can be red, okay, and it is also indicating that the market is a seller's market on that particular day and the buyers could not do anything much on that. So it indicates that from there on the sellers will keep on dominating the market, okay, and eventually you see that from that resistance level it is a reversal trend which is seen after the very next day the gravestone doji has appeared and the market is moving down. Market is moving. And again you get to see that the market moves sideways and again it moves up. So likewise it may show, as I say, a failed rally and indicate a potential. So here you see that it's a failed rally and it indicates a potential bearish reversal, which is what we get to see if it appears after a long uptrend or long right. So a very important candlestick chart type, okay, and how you have to interpret is something very important. So just see what are the candles which are happening immediately after that gravestone doji, right, and that will give you kind of a more clarity as to which direction the market is going to. Let's now come to another chart type, which is spinning tops. And why spinning tops? Because of the kind of the pattern which you get to see. Okay, and here in this case, unlike the doji, what you get to see, whether there was hardly any real body to be seen, here you get to see that these spinning tops, they have small real bodies with upper and lower shadows that are of greater length than the bodies. Okay? It can either be bullish or it can be bearish. So it can either be white or green or it can be red or. Now let's come to the white or so to say the green spinning tops. Alright. So in this case, as you can see, the chart type is white green spinning top and you get to see a small real body, okay, and the upper and the lower shadows, they are greater than the length of the real body. Okay? So the body of the candlestick is white or green and is small. However, the upper and the lower shadows are longer than the body. Okay? So what kind of trading behavior does this indicate? So the market moves higher and then sharply lower or vice versa, right? And if it then closes above the opening prices, and that is why it is green in color. Okay, so this creates, so since it is closing slightly above the opening prices, it creates a tiny white body or a tiny green body. And since the real body is small, okay, as compared to the shadows, okay, which are on the, which are having a longer length, It represents a complete indecision between the bulls and the bears. Why? Because this range between the opening and closing is comparatively small. So who are putting pressure in the market, or who are in a way controlling the market, is something which is not very clear. It's something which is not right, and thereby it indicates that the markets, it's indecisiveness which is existing in the market. Okay, and of course, in this case, the length of these wicks, okay, they are not that very important, okay, or any kind of, they are not used for any kind of interpretation. But however, they ensure that this kind of a candlestick style, it looks like a spinning top. So the small body relative to the shadows is what makes the spinning top, right? So if a white or a green spinning top is observed after a long rally or a long white or green candlestick, this implies weakness among the bulls, and it is a warning of a potential change or an interruption in the. And if a white spinning top is observed after a long decline, so it can be after a long rally, okay, or if it is after a long decline, okay, or a long black candlestick, this implies weakness among the peers. It can be either ways, and you have to be very careful. And it is a warning of a potential change or an interruption in that particular. So it again signifies a kind of a reverse. Okay, so of course, as I said, that one single candlestick does not reflect the true sentiments of the. Okay, and it might at the most reflect only one day's trading and can be interpreted both as a continuation or a reversal. So what is the best way of confirming this? The best way of confirming this, that whether it is a continuation or a reversal pattern, you then have to see what is happening, what is the candlestick chart type immediately after the white spinning top or the green spinning top is observed. Okay, fine. So let us look at this. You can see a chart type over here. What is this? It's a candlestick chart type, but what kind of candles do you get to see? You see various candles, I mean green and red, and here you see the white, I mean in this case of course it is green, the green spinning top. Now what do you see? What it reflects? Okay, so let's assume you're following Aston Martin's share price, okay, which opens the trading day at 442. So it opens at 442, let's see, pence. As sellers enter the market, the share prices starts moving, hitting a low of 430. So the sellers have pushed the price down to 430. However, the buyers, they start to push back, and the share price reaches as high as 455 before the market settles and the share price closes at 445. So if it is closing at 445, obviously it indicates a bullish sentiment, and the candlestick type is going to be bullish, representing a green colored real body. So it opened at what price? 442. It closed at what price? 445. So a difference of 3 between the opening and the closing. What was the lowest price of the day? 430. What was the highest price of the day? 450. So what you can see over here is that the length of this upper shadow and lower shadow are comparatively longer than the real body. Okay, and since the range between the opening and closing, though it exists, okay, but it is small, so it creates that spinning top. It shows that this chart type, candlesticks chart type, reflects a spinning top. And if you get to see a spinning top which is green in color, okay, and it is after, you can see, a long bearish trend. You see this bearish trend which is for a very long period. and then you get to see this green spinning tops. So this gives you an assurance that a bullish trend is likely to happen. So this creates a bullish spinning top candlestick as seen. And that is what you get to see. So after that, green spinning top is observed, which is to be seen after a long bearish trend. You again see that from here on, the market moves upwards. Very interesting. So if you get to see this kind of a chart, immediately I think you should start buying this. So just from here, and if you do so, you are definitely going to make some return. All right. So now let's move to the black spinning tops. Now again, in this case, what you get to see, it indicates a bearish sentiment, and or it can be black spinning top, or it can be a red spinning top. Okay, and if it is black or green, it indicates a bearish sentiment. And what you again get to see, spinning tops are characterized by small real bodies, and it is also characterized by an upper and lower shadow which are longer than the real. So you can see that this is the closing price of the day. This is the closing price of the day. Sorry, this is the closing price. Yeah, this is closing. This is opening price. This is the highest price for the day, and this is the lowest price of the day. So this is the closing price. This is the opening price. So since the closing is lower than the opening, okay, it reflects a bearish sentiment, and it is indicated by a red real body. However, if you look at the shadows, both the upper shadow and the lower shadow, what you then get to see is that the highest price for the day was, it was considerably high as compared to the opening, and closing of the day. And if you look at the lowest price of the day, it was, so you can see it was it was more lower as compared to the opening price. Okay, so what you get to see over here is that there is a big range between, or substantially a big range between the highest price reached for the day and the lowest price of the day. But at what price did it close? It closed below the opening price, indicating a bearish sentiment. Okay, so you have to be very careful about the opening price, closing price, the highest price of the day, and the lowest price of the day. And this again indicates what? Since it is red or black, whatever the color which is thrown by the software, it again shows a spinning top. Okay, so the real body is small, the upper and lower shadows are longer than the real body, right? So in this case, what it indicates about the trading behavior or the trading pattern, the market moves higher and then sharply lower, or vice versa, whatever the case may be, and it then closes. So this is the close. It then closes below the opening price, thereby creating a tiny black or tiny red body. And again, it shows a complete indecisiveness between the bulls and the bears, right? The small body relative to the shadows is what makes the spinning tops. Now, how will you interpret it? So if the black spinning top, okay, or red spinning top, okay, is observed after a long rally or long white candlestick, this implies weakness amongst the bulls. Okay? And it is a warning of a potential change or an interruption in the. Now that reversal is going. And if a black spinning top is observed after a long decline or a long black candlestick, this implies weakness amongst the bears. Okay? And it is a warning of a potential change or an interruption in the trend, which means from that point, so that indicates that the support level has been reached, and after you witness this black spinning top, you can understand that there is a reversal which is going to happen. But what will be, you have to confirm yourself before you take any decision. and that will be the candlestick chart type, which is happening on the day after the black spinning top is observed, which will give you an understanding as to what is going to be the trend from the whether the continuation is going to follow or a reversal pattern is right. So let's see a chart type, that is, let's see the black spinning tops or a red spinning top. So here you can see a black spinning top. It can be black or red, right? So you see five letters over here: A, B, C, D, and this chart type, it shows black and both white spinning tops on a daily basis. And look at this A. What is this A indicating? This A is indicating a black spinning top because the body is black. Remember, the body can also be red. It's not a main thing, but if it is black or red, it is indicating a bearish sentiment for sure. So the candle at A is black in this case, black spinning top, because the body is black. As you can see, the body is black. Okay, it is small, and the candle has shadows. You can see the shadows. These are the shadows. These are the shadows. These shadows. So the shadows are taller than the body. So this one occurs in a downtrend. You see this? It occurs in a downtrend. The breakout, if you see, it's up. So it is indicating a reverse. Right? So a breakout occurs when prices closes either above the top or below the bottom of the candle. That is wherein you can see a reversal is. Okay. Now you can also see B over here, which is reflecting a white spinning tops, but this white spinning top is appearing as an price trend. Okay, and if you see the small body and the tall upper and lower shadows in this case, look at the tall upper and lower shadows in this case. So the price breakouts upward from this spinning top, which was 2 days later. Do you see this? Yes, the price breaks out. The spinning top is observed after 2 days. Okay, later. Okay, of an upward trend, meaning the spinner acted. This spinner acted as a. You see this P, which is called as a spinner. This spinner acted as a continuation of the upward trend. Okay. Now again, if you see C, D, and E, which are all your black spinning tops. Okay, and the candles C and E. Do you see the C and E? So they are all acting as a continuation of the downtrend, whereas D in this case is showing a reversal. D is showing a reversal because immediately after that there is a white candlestick which is. Okay, so this was about your black spinning tops and how you are going to use it for your decision. Now let's come to the high wave candles. So the high wave candles, they have small real bodies with long upper and lower shadows, as you can see over here. So since we have studied doji and spinning top, both black spinning top and white spinning top, so this high wave candles, as you can see, it also appears to be very similar to a spinning top or a doji. Okay? And it again signals indecisiveness, right? So the idea is that over the course of the given period, the bulls and the bears, they both tried to move the market, but neither was able to hold on to their gains by the end of the. So like a spinning top, a high wave candlestick pattern again has a relatively small real. Okay? So the difference now, you will always ask, what is the difference between the spinning top or a doji? How can you differentiate between a spinning top or a doji? The difference is that a spinning top has a relatively small upper and lower wings on shadows. whereas a high wave candlestick has relatively long and lower wings. So it is relatively having a long upper wing and a long lower wing, revealing more volatility as compared to the spinning. So this is one good way, or you can say this is the only way in which you can differentiate between a spinning. Okay. So uh, how are you then going to use it for your decision making? That is again very important. So again, it reflects a price reversal, right? And so you have to be very careful once when you are again taking some kind of a decision related to this. So the real body of a high wave can be larger than the real body of a spinning top. So this is again the difference between the two, but should be relatively small when compared to its total range. So this is again a kind of way in which you are going to differentiate between a spinning top and doji. Okay. Now, how are you going to use it for your decision? Here we see a high wave candle. In fact, there are various high wave candles which we get to see over here. So this is one. This is another one. Then you again get to witness another one over here, and again another one. Okay. So in the image above, you will see a series of high wave candlestick patterns, and how they are different from the doji and spinning top is something which we have just understood. Okay. So look at the wicks. The wicks are going to be longer as compared to the spinning top, and also the real body of the high wave can be larger than the real body. This is the body. Okay, so the real body of a high wave can be larger than the real body of a spinning top, but should be relatively small when compared to its total range. When we talk about the total range, it is the highest and the lowest, or the opening and the closing as. So this is one way you can differentiate. So as you can see in this particular chart, that there are various high wave candlestick which you can see across this particular chart. Okay, so the first one occurred after a small retrace in the overall trend, which is not typically where this signal would be used. However, as you can see, its occurrence after a relatively large bearish trend. Occurrence after a large bearish candle signaled indecisiveness, and it was followed by an inverted hammer. So what is an inverted hammer? Inverted hammer, it represents a weak bullish signal, and then the trend continued up. Okay. So here it was not that giving you not that strong kind of a signal, because immediately after that you found an inverted hammer which signified a weak bullish signal. But after that, what you see that the market trend sort of it continued upwards. Now the second occurrence, as you can see in the image above, is a more useful example of trading the high wave candlestick pattern. So it appeared after an extended uptrend. After an extended uptrend, signaling the market was unsure about the continuity of the uptrend. And at that very point, since it was, the real body was very close, I mean, very small, okay, it indicated that there is going to be some kind of a reversal, because this was witnessed after a long upward trend. And that signal, this signal of high wave, was followed by a bearish engulfing candlestick. Okay, all right, that engulfed the previous two candlesticks. The trend reversed from that. Just see this. Again, you are seeing a high wave candle, right? So the third high wave signal appeared shortly. Do you see this? The third high wave signal appeared shortly after the previous bearing engulfing pattern, and this signal more indecisiveness, but ultimately the trend continued its reverse. Trend continued its right? So you have to be very careful while you are making the interpretations from these candlestick chart, right? So I think we should close over here. Next time when we meet, we are going to take more such chart types, and the most important thing is that you have to be very very clear as to what that particular type indicates and when it is appearing, whether it is appearing at an uptrend or whether it is appearing at the rock bottom. So whether it is appearing at the resistance level or whether it is appearing at the support. And accordingly, you have to think that which direction the market is going to move from here on. But at the same time, to be more specific, okay, to take more informed decision, okay, you have to see what is happening after that particular candlestick chart type has taken place. Immediately after that chart type is seen in the market, what is the immediate, the very next day or the following day's chart pattern, which is considered, and that is going to give you a strong understanding as to which direction the market is going, whether the continuation is going to follow or whether it is going to be a. So this is what you have to be very very careful. So today we had taken up doji, we had taken up spinning and various kinds of doji, of course, and we have also taken the spinning tops, the white ones and the black ones, or so to say the green ones and the the red ones. Okay, and then we had understood that how will you use them for your decision making, and then we understood what is the difference between a spinning top and a doji, and then we had taken up the high wave candlestick, and we understood that though high wave candles look very much similar to the spinning top and doji, but what is the major difference? That is something which we understood again in today's session. And of course, how the high wave candlestick should be interpreted for your decision. Right? So be very careful. Two things very important, as I said a while ago, that you have to look at when that particular chart type is happening, whether it is happening at an uptrending market or whether it is happening at a support level. Second, you again have to see that what is the chart type immediately after that particular pattern is. So if you are seeing a high wave candle or a doji or a spinning star, okay, spinning top, okay, you then have to see what is the immediate or the following day's chart, which will give you a more uh, in-depth understanding as to what will be your position. But remember, these chart types, you have to be very, very prompt on all these, because the very next day you might find that a different set of news is coming in and you get to see a different kind of a candlestick chart. So essentially, whenever you go for technical analysis, it's broadly for the traders, because the trends they change very fast, even within a day, right? So you have to be very, very prompt. But whenever you take a decision, let me just add a word of caution that don't take decisions just by your gut, right? You have to be really there in the market for a long time, or you have to be very thorough about the chart types, okay? And only then it will be beneficial for you to take your decisions to really reap profits. So with that, I come to an end of today's technical analysis third session. Thank you so much.